Hello, hi, welcome to yet another episode of Ying's Squawk Box. I hope you guys all had an awesome week. Me, myself personally, I've had an awesome week. Under my leadership, Ying's capital has hit all-time high, and we once again delivered a good base cost for our investors, fulfilling our fiduciary. So with that being said, let's get this episode started. Today we're going to be talking about what have I done and what are some of the interesting things that I've seen in the past. Let's get started with the chart. This is the S&P 500. As you can see, starting from this day, February 21st, it does not look good. And then on February 24th, we have this huge gap down. And I think I'm completely flat on this day, February 25th. So I actually didn't really take any of this hit during this late February, early March kind of period. I wouldn't say I'm a very good trader when it comes to this kind of performance, because if you're a good trader, you would have sold short here and then you would have caught some of these profits, as some of my friends on the trading floor did. But for me, I avoided it. I think that's a better practice for myself. It's tailored to my personality, it's tailored to my patience, and it's been working well for me so far. So for me, I think my best practice is to avoid this part. Now, let's take a look at what I've done. March 12th, I entered with 20% account value. So March 12th, let's take a look at that. That's March 12th. Let's put a vertical line, boom. And for me, that's considered day one. And March 12th, let's put a horizontal line. It goes something like that. Now, as you can see, that's not the bottom, right? I didn't say I'm calling the bottom. That's why I entered 20%. 20% means I'm not sure. It's rather small portion when it comes to money management, and it's really because I know there's a certain probability that this thing is going to go down further. And it did. So I keep a couple of things on my watching list, and by March 13th, I think I entered about 50% account value. So that's immediately the next day. Now, I'm not saying that's a very good practice. I would say that I rushed a little bit here within these 2 days. I think a much better practice will be waiting for a lower price to enter than your first initial buy. The next day I saw this gap up, I actually got a little bit worried. I thought the market is going to bounce back from there, and I'm left without it. That's definitely something I don't want to do, so I want to participate in. Now, after that, I decided to wait a little bit more patient because I already have 50% account value in the stock market. I don't want to be too heavy, so I wait till March 19th, which is this day. Let's put a vertical line, and that's considered day 3. So day 3, on this day, I had about 80% account value in the stock market. And as you can see, this dip is starting to form. And about March 24th, which is on this day, I had about 70% account value in this area. So something like that is definitely interesting. Let's put a vertical line, and I had 1, 2, 3, 4. 4 days of opportunity. I participated in this market. I try and grab some shares. And that's going to be what I consider my kind of practice when it comes to handling how to pick the bottom area. Now, me personally, I don't think this is the bottom. It's going to be very rare that the stock market is just going to go bounce back out from there and hit 330. I don't think that's the case. I think it could be. I think we could be seeing much more volatility coming to the market when we're entering into April or May. I think that's going to be a time when we can tell if some of the business practices in the market do not survive this market environment. Especially when it comes to virus. People are working from home, people are working remote. I want to see how things played out. I want to see the entertainment section. I want to see the remote working control section. Something like that's definitely worth our attention. And it's a little bit too early to say if we are just bouncing back from here or we could potentially be entering a deeper recession. So with that being said, let's take a look at the holdings. A couple of the interesting holdings that I'm particularly involved in. Um, I'm not involved in QQQs right now, but these couple of stocks, I can tell you that it's definitely worth our attention. First name I call out is Zoom. Zoom, I think I started to participate somewhere in here. That's not really a good buy. At least it could have got a better price. Now, in long term, if you're a value investor, when you see this base coming, that's usually a good signal. Let's put a horizontal line. That's the bottom. That's the IPO. We shoot up to 100. We came back down. We hold that bottom at around 60, and that's the base. Once you break out on this day, technically speaking, that could be a good buy. And then afterwards, it's just some small retail buyers coming in chasing this market high. If you're not involved there, you could potentially be involved somewhere here, which is what I did. The moving average catch up, potentially there's going to be another pop. So something like that's definitely interesting. And then a couple of other names. Amazon. I think Amazon is interesting because when we look at the market, this S&P actually breached all the way to this low of December 24th, 2018. Let's put a horizontal bar. However, if you look at Amazon, it did not breach that low, right? This December 24th, 2018 low is actually somewhere here. And Amazon starting to bounce back on this day. Same day as I enter the market, when I enter the market, I enter Amazon. And the reason I'm picking this name is because when market goes down, breaching this low, Amazon did not. It's not even close. So to me, that shows relative strength, which is why I got involved. I call this bounce back up from 1680 all the way to 1955. I think there's a good chance that Amazon is going to bounce back up even higher, considering people are now ordering online much more, and people are watching Amazon Prime, things like that. That's definitely something interesting. Another name caught my eye is Netflix, and it's pretty much the same philosophy. Here we have this bottom, December 24th, 2018. We have this bottom. We did not breach. Here, it's not even close. So I got in Netflix as well. The same time I got in Amazon, same time I enter market. And it bounced back up a little bit, and we have a couple of good runs from 300 all the way to 360. Something like that's definitely interesting. For me personally, I think me and my roommates are starting to watch Netflix more because we stay home and we're trying to take advantage of being with each other, support each other. So Netflix is definitely one good way to do that. And so far so good. Another name that's same trade with Zoom, although slightly different, is Slack. Now, me personally, I use Slack on a daily basis with my work as well as with my fellow friends and classmates from Columbia University. But this is a very difficult chart. If you look at the IPO on this day, that's the top, 42. Let's put a line. It touched it, come back down, and we have this entire bearish run from June 21st, 2019 all the way to when this base is starting to form, which is in November 19. And as you can see here, we actually held out this $20, and it looks like it's a support, right? It did bounce back up. It looks like it could go higher. But the coronavirus broke out and people are staying home, and this stock actually took the same hit as market. It come back down, it formed this random support at 16. No one's seen this happen. And the reason I think this is a good pick is because when it bounced back up, it actually immediately closed this day above this previous support. So what that tells me is this is a daily chart. If you look at the weekly chart, this would have been a tail down. It's not technically speaking a big red bar poking below this support line on $20. So it could have been a fake breakdown to the downside. So what that's telling me is the sellers in this market is technically speaking not that strong and not that powerful. So on this day, I believe it's March 19th, I participated in the stock. I grabbed some shares. I caught some of the big movements. And now we're $28. And let's see how it goes. Now I'm not saying the stock is just going to make new highs from here. We still see this big tail here poking into the 30s and come back down immediately. I think we could potentially see some volatility coming on this name. The moving average needs to catch up. And then let's see how that goes. Oh, this is going to be interesting. Next couple of names is Boeing and Disney. Look at that. Boeing, I made a mistake. I think I called off the bottom somewhere here and then somewhere here. I believe it's on this day. I bought again. I believe that's a support. I've been talking about this channel all the way from December 21st, 2018. And then it broke. It's like someone had a huge diarrhea, and when it starts, it just gets everywhere. And it's just going straight down. Here, when I was watching the stock forming the space, it's actually getting very interesting around this $100. Me personally, I don't see anything particularly interesting in $100 except that on this day back in 2016 we poked around this $100 area, it's still a terrible looking chart. I mean, we washed away all of the gains that we've made since 2016, and that's a big gain. From 2016, we were at $120. The stock went to $440, came back down to $100. So we're talking about 75% to 80% drop in this name. And once it hits $100, make this couple of make this base form a couple of inside day, and it bounce back up on this day. And I believe it might be a good time to participate back into this name. So I grabbed some shares here, and I had a couple of good days here. And then the next name is Disney. For Disney, what's interesting thing is I made a mistake as well in this name. I didn't take a loss really. I've been looking at this name all the way in 2019, 2018, I believe. Once this gap up, it's been very difficult to trade because if you miss this gap, you're missing a whole lot of area that you could have bought around $100. And I believe that's really one big reason why when the coronavirus started, no one's buying it. I believe investors are really waiting below $100, which is why when it's dip form and when it bounced back up, it's fast and furious. So something like that is definitely worth our attention. Disney is not the kind of name that traders would just go in and buy a lot of shares. It's definitely an alpha name, especially for big funds, mutual funds. And I believe Disney and Netflix should have acted similar, or at least much more similar than the price tells us. However, it did not. It did not act even close. This dip was fast and furious down here. When it bounced back up, it's also fast and furious. And we do not really have any reference point. I believe it poked around this $80 somewhere here in October 14th, 2014, which is, a couple of years ago. 2014 was when I graduated undergraduate school, which is a long time ago. And this is really very random and arbitrary. So I believe this is quite difficult to trade in this name. I think a good practice is when you see the bottom coming in the market, you participate in this name and just don't look back for a couple of years. So there you go. I hope you liked today's episode. If you want to support the channel, give it a like and click that subscribe button, and I'll see you in the next episode.